Hello everyone, thank you very much for joining me for today's daily snapshot. Today we're going to be looking at the VIX, and it's at a near bearish turn, and we're going to look how to trade it. But before we do that, please take note of the following important information. Please note that CFDs are high-risk products and that you should be completely aware of the risks that they pose. Also, please note that this is a general market commentary only and does not constitute investment advice. And finally, these are the sources of information that we'll be using in today's snapshot. Okay, thank you very much for that. Now, the VIX is a measure of short-term volatility, and it's based off of option pricing of S&P 500 stocks. It tends to rise as market participants become fearful, and that's because they are bidding up the prices of puts. Let's just bring up the chart and take a look. Now, in the top chart over here, we have the actual VIX. I want to draw your attention to the following areas. I'm going to just introduce a vertical right over here. I'm going to introduce another vertical round about here. I'm going to introduce a third vertical just over here. Okay, and what I want to show you is that if you take a look at the VIX on the top chart, here we've got the exponential moving averages actually crossing bullishly, what we call a golden cross. So it's happening at the first vertical, it's happening at the second vertical, and it's happening at the third vertical. And at the same time, you can see just after that the RSI crosses above 50. Just after that, on the second vertical, the RSI crosses above 50, and so on. Now, the very bottom chart is the S&P 500, and what I want to show you here is as the EMAs cross bullishly and as the RSI tends to move over 50, we get a move where the RSI, where the S&P 500 tends to move into a pullback. Okay, so it happens on the first vertical, happens on the second vertical, happens on the third vertical. Now, the interesting part of this analysis is that it looks as if we may be getting another bullish or golden cross on our top chart. The RSI is already moving above 50, and of course we want to now be very cautious because that may be ushering in a correction or a pullback here as some profits are taken off of the table. Let's just end with some key takeaways. And the VIX may be suggesting that there is an increase in caution by market participants. A golden cross of the EMAs and the RSI above 50 may signal profit taking. This after a good impulse move, which has currently run for about 17 weeks. And also it's after a very good Q1 earnings season. Now, we note that fundamentals remain sound, and any correction at this stage may be compelling for longs at the support levels. I hope that you found this snapshot useful. If you did, go ahead and click on that subscribe button. Thank you very much for joining me today, and I look forward to speaking with you again in the near future.